An awful lot is spoken about patterns in classical bar charting, but the patterns that aren't spoken about so much are patterns, recurring patterns in volume and open interest that accompany certain price patterns. The way to think about volume and open interest is as a piece of evidence that will help interpret the price action pattern. Let's take a simple pattern. Triangle continuation pattern. We know it's a triangle because it's established by at least 4 points, and we know that the minimum price target is that distance projected beneath the point of breakout in the lower triangle. That's the minimum target. So at this point, all guns are blazing for a bear position. But it's also worth remembering that there is, in association with that pattern, there is a pattern in volume and open interest, and let's just draw those here. If this is vol, and this is open interest, just recapping quickly, volume, of course, is the intraday market energy turnover, and open interest is the interday, that's to say between days, volume, and it's a measure of speculative energy. This is the measure of speculative energy within a day, and this is a measure of speculative energy from day to day. Typically, in the initial bear run, volumes will be high and rising. If I can just set this back to take it back a bit further. Volumes will be high and rising, and then the market will bounce, and this is a pullback in a bear market, so volumes will drop. There'll be a marginal increase in resuming the bear trend, and volumes will drop even further. So you'll see that there is a decline in volume as the consolidation begins. And then on the moment of breakout, there'll be a massive jump in volume. Open interest, similarly. Open interest will be rising. On the bounce, it'll fall. There'll be a small amount of cutting positions. It'll rise again on the sell-off, small amount of cutting positions, and then it'll rise dramatically once the market breaks down here. Looking for these patterns in volume and open interest can help tell us whether this breakout's important. If, for example, a rectangular continuation pattern, this move happened and volume fell, that would be placed great question mark as to whether that was a true breakdown. If that is endorsed by rising volume and rising open interest, we're encouraged bears.